Morning, Steve Free in Chicago with the morning grain comments. Kind of a mixed tone overnight. You've got wheat a little bit higher, beans a little bit higher, corn about unchanged. The outside markets, right now we've got the dollar lower, crude's lower. Chinese stocks rebounded yesterday, which is helping copper. And I think the big thing overnight is that the U.S. two-week weather maps are a little bit confusing. They've got a little bit for everybody. They show warm, dry conditions into the weekend. Overnight, the rains were across the Dakotas, Minnesota, northern Illinois, and into Indiana. They have late next week this kind of heat ridge breaking down, bringing rains across the northern plains, northern Corn Belt, and into the eastern Corn Belt. The second week looks warm and dry. So if you take it for gospel, if I'm a corn plant, this is an okay forecast, which kind of reduces some of the inflammatory forecast that we had yesterday on the noon map. So again, maps change every 6 hours, and that's going to add a lot of volatility to the marketplace. If you look at $12 beans, $4.50 corn, we really don't need to go any higher if the weather's okay. But if we have bad weather, we'll go a lot higher. So it's kind of a big crossroads, not only for our markets, but the stock market and the crude oil market. Still, the vote for UK to leave the EU is in favor of leaving. And we're also kind of watching some of the China data, which suggests that maybe they're not growing as fast as some of these commodity markets would like to have. Also, there was a report by the International Food Policy and Research Institute that said ethanol and bioenergy is no threat to food security. In the cash markets, the corn base is slipping a little bit as farmers trickle some corn into the marketplace. The bean base is staying relatively firm with expectations as we get closer to the fall. There could be big demand for both export and crush. Traditional funds yesterday sold meal and wheat. They bought a lot of corn. They continue to add to their net long in the corn, so you got to feed a bull market twice a day, and so we'll see if the weather continues to add to those longs. It is interesting that this is the first day in which the July liquidation of the open interest did not roll everything into the deferred contracts. So they took out 19,000 July beans, open interest is down 11. They took out 30,000 corn, but open interest is down 12. They took out 13,000 July Chicago wheat, open interest is down 6. So just wondered if the kettle's a little bit hot for those guys to roll those positions forward. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.